Well, a happy Thursday to you. I'm Marlon Bowling with you, your tour guide to the ag commodity trade. And, well, we had a higher trade overnight, and here to help sort things out, let's bring in Brian Hoops, president of Midwest Market Solutions. He's in Springfield, Missouri. Well, hey there, Brian. A little bit of a turn of events here in the overnight trade. Things looked a little brighter, a little higher overnight. Would that happen to have anything to do with the fact that we rolled over to the next month on the calendar overnight?
Marlon, it did have something to do with it. You know, we got away from the end of the month in here, and now maybe we can start looking at some fundamentals, particularly weather for these grain markets. Now that we have a debt ceiling agreement reached in part, maybe some of these other political pressures will kind of ease, and we can look at the weather, and it's fairly threatening across a lot of the Corn Belt. A lot of the rains are kind of confined in some of those drought areas of Kansas and Colorado, and Oklahoma has received some decent rainfall. That really improved their winter wheat crop. But you look at the ice states of Iowa, Illinois, Indiana, where a lot of the corn and soybean crops are growing. We're probably going to see a big decline in crop ratings come next Monday. I think we'll see the first soybean ratings of the year on Monday, and those numbers, they'll probably be high, like the corn markets start off that way and then start to retreat, as I would expect corn ratings to be down on Monday because of the lack of rainfall. So we've heard a lot of reports from a lot of different areas that the crop had enough moisture to get out of the dirt that it was in and sprout and germinate. But now it needs more rain to continue to grow and develop that root system, and there just isn't that moisture out there in a lot of areas. Some areas, yes, of course, receive some rains, but in the vast majority of areas, it's dry, and there's not much in the forecast for the next week or so.
Well, I know last weekend on my journeys through the western part of the Corn Belt, we did notice that in, places, for example, like southern Illinois, parts of Indiana, that corn was actually looking maybe a little bit gray, a little bluish. You could tell it was under stress from lack of moisture as things were warming up. It wasn't real bad, but the corn was about a foot tall, so it's about at that point where it's going to be hitting that growth spurt, and it's going to be starting to take a lot of moisture. You have to consider, too, Brian, the fact that once that corn gets up to about waist high, it's already determining the ear size by then.
Yeah, exactly. And, we're not seeing a lot of oppressive heat at this point in time either. So, we're just could have a real perfect growing season if we get enough moisture to do that, and we don't have that at this point in time. So I think our yields are going to suffer unless we get some rainfall, and prices really have virtually no weather premium in the market whatsoever. We had soybeans hit contract lows yesterday and then recover. And the wheat market's also at some new lows. Only the corn has held in there fairly well. And has a little bit of weather premium, but key technical area to watch today for December corn, I think, is that 536 area. There's a potential double top on the charts there. Getting above that area, no doubt, has some buy stops, and I think if we could get above it, we could really start to move higher. And looking for at least $5.75 to the $6 mark sometime by the middle of June here. Given the correct weather scenarios, I think we really could see some appreciation in values because of the lack of moisture that we have, and we've already dialed in a record crop. Those yield numbers will start to come down with the lack of moisture.
Well, let's look at these prices then. On July corn, we're actually running 9 3/4 cents higher right now. We're at 603 3/4 in the overnight trade anyway. And then if you look at that December contract, 11 3/4 higher at 533 1/2. Well, let's look at the soybean market in the Globex trade, and on these quotes provided by bar chart, look at July up 22 1/4 at 1322, and you have November 22 1/4 higher, keeping even, 1168 3/4 at the end of the overnight session. In the wheat market, it's really been struggling for a couple of weeks. Well, not last night. July Chicago wheat up 16 1/4. 610 1/2 per bushel there. On the Kansas City market, we had July up 18. We closed overnight at 808 1/2, pretty close to the overnight high. Spring wheat trade in Minneapolis, we were 13 1/4 higher on July at 793 1/4 as it tries to work its way back up to that $8 mark. And July cotton up 199 points this morning at 85.47. December up 110. We'll talk about our livestock trade with Brian Hoops right after this. All right, let's carry on with our conversation with Brian Hoops. He's with Midwest Market Solutions. In fact, he's the president, the owner, the head kahuna there. All right, let's talk about livestock. In the livestock trade, cattle have been flying pretty high here lately. I believe we made new contract highs again yesterday, did we not?
Yeah, we did. We talked about contract lows in some of the wheat and the soybean markets, but contract highs in cattle and feeder cattle for that matters. And those markets have been really just red hot. We haven't seen a lot of cash cattle yet, Marlon. There's been a handful of trade in the Southern Plains and on a dress basis, really not enough to make the markets. But the majority of the feedlots in the Southern Plains looking for 172 to 173 to be paid this week. We would expect at least $1 higher type trade with packer margins improving with the higher cutout values that we've seen for the most of this week. And then next week, it's a full kill schedule. The Packers do need to buy some cattle, and there's not a lot of cattle listed on those show lists. Only about 219,000 head are out there. And so, it's cash markets that are driving the futures markets higher. We may set back a little bit in the feeder cattle because of the higher corn prices, but the overall trend has been for higher prices to continue. So we'll be watching that very closely, Southern cash cattle plains development as it goes on for today with June live cattle options expiring tomorrow.
Okay, good point. Let's take a look at where we were yesterday when we wrapped up our daytime session on the live cattle board with our quotes provided by Bar Chart. We were higher across the board. Didn't necessarily start out that way, that's for sure. But we had June live cattle closing 25 higher. And we'll go with that August contract, too. It's 50 higher on the close yesterday at 167.67. So that wasn't very far from its high of the day. If you look at our feeder cattle market and how it closed, we had the August contract $1.40 higher at 239.17. And then you had the lean hogs, and lean hogs had quite a start to the week. Look at July lean hogs. I think that's where most of the volume is. That was up 380 yesterday at 83.32. Now, it was in expanded limits, but I believe we're back to normal, aren't we, today?
Yeah, correct. We did not close the limit up, so we're back to normal trading limits, which is 475 for the hog market. And we've seen some massive short covering so far this week. It gapped higher yesterday. We'll look for additional short covering in the hog market. It's going to go as high as the short covering allows, basically.
Interesting. So we'll see if we can follow through with a higher open today. Great stuff, Brian. Thank you very much for joining us here on a Thursday. Brian Hoops, the president of Midwest Market Solutions in Springfield, Missouri.